We got the jobs numbers out today. They were better than expected, 850,000 new jobs. At the same time, unemployment rate ticked up. Does it tell us much about where the economy is going in the second half of this year?
Probably not, David. While it was a good number, it wasn't a blockbuster number, and we're still seeing real unusual behavior by workers right now and decisions regarding whether or not to go back to work. These decisions at some point were thought to be related to the fact that there was this $300 supplemental unemployment insurance piece that was tacked on to benefits. It turns out that that rationale is probably not what's going on. People are thinking about other things. They're thinking about their health. They're thinking about the vaccination rates. They're thinking about childcare. So the decisions, which, and of course they're thinking about wages and benefits to the jobs that they're going back to, but the decision making, I think, is a little bit more complex than economists might have thought about before. So the number by itself, I would say, is it's a good, solid number. Clearly, there's more room to go. The numbers of people back in the workforce are not what you would expect them to be. There need to be many more coming in, and they're not there yet. So I would say more progress, and let's not get fixated on this number alone.
So Glenn, Sarah says it's complex. Such a nice word. It's complex. We spend a lot of time talking about the jobs numbers every month. And in part, it's because what we think it will mean for the Fed and what they'll do. At this point, if you're in the Fed, how do you interpret numbers like this? I mean, if you're looking at price stability, employment, what do you make of these numbers?
It's a great question. I agree with Sarah. I think we learned something, but not a lot, from the report today. It was good. We have 850,000 new jobs. Wages were rising 3.6% year over year. But we have more job openings in the country than we have unemployed people. For the Fed, I think it means the following kind of arithmetic. We're down 6.7 million jobs from the pre-pandemic period. The Fed believes that about 2.5 million Americans may have retired or were thinking about retiring as part of that. So that means that the present pace of job creation in the spring of 2022 will be approaching full employment. And so the question for the Fed is, how do you think about that? Does that mean tapering early is a good idea? How much of this is just the change in the reopening patterns in the economy, the unemployment benefits and so on? I think it's a tough time for the Fed, but I would prefer they spend a little more time thinking about what next spring could look like and what they may do to prepare.
Well, Sarah, next spring we have to be concerned about maybe full employment. There are other things as well. We also had the Case-Shiller housing price numbers come out this week, and they went up the most in 30 years. There are people talking about a bubble, certainly not a bubble, a real boom in house prices. Does the Fed have to be worried about things like that?
Oh, yes, the Fed has to look at that. And the concerns about a housing bubble, I think, grew a little bit more with the numbers that came out today. You'll also be hearing some Federal Open Market Committee members talking about housing specifically, because of course the stability, the financial stability consequences of housing prices is really quite, can be quite concerning. So the Fed, of course, has regulatory tools that it can engage in, that it can use, that it can deploy in order to, kind of take away some of this, froth in housing markets. The Fed sometimes talks about, wow, should we use monetary policy as, the sort of the whole big, set of tools on the monetary policy side we have to, to take the oxygen out. But they are looking at this. You can be sure of it, and especially today's numbers.
So Glenn, you're an economist. You're not a markets guy. But at the same time, it's interesting to me the market's reaction this week. I mean, we're starting the second half of the year, and it's a melt up. It's a general move up. We're still at records or close to records. It's gradually moving up, not dramatically. Is this, we think, because they think the Fed will actually taper and tighten monetary policy appropriately to avoid inflation, or because they think they won't. I'm not sure whether they're happier if the Fed doesn't do anything, or they think they're going to jump in.
I think it depends on the market participant, David, but I think you're hitting on exactly the right issue. You know, to Sarah's point, an obvious thing the Fed could do is stop buying MBS every month. You know, that's an obvious thing to do before you get to regulatory and margin and lending changes. But I do think we're at a point where the Fed is really teeing up a Goldilocks scenario where the economy reopens well, productivity rises enough to soak up the wage gains, and demand stays strong without being inflationary. All of those things could happen, and that would make the market price reasonable. But there are a lot of probabilities in there to multiply times one another.
Well, let's go to that Goldilocks notion, because I get nervous about Goldilocks, Sarah. Pricing to perfection, whatever you want to call it. That would make me really doubt whether we can keep up anything close to the pace we had in the first 6 months and the second 6 months. There are a lot of things that could go wrong here.
Oh, completely. And Glenn actually puts his finger on a really important debate, which has to do with the 40 billion of purchases that essentially the Fed is making every month of mortgage-backed securities. So in other words, the monetary policy tools that the Fed is using right now are completely linked to what is going on in housing markets. And so the question of whether those purchases get scaled back is an important one, and is a live one, and one that's getting discussed, because again, with these housing market numbers, coupled with the fact that the Fed is still in a highly accommodative mode, they are still doing quite a bit of purchasing here every month. So the question for them is whether or not to start tapering back and kind of letting out some of the steam from the housing market.
So Glenn, what's keeping them from doing it? I mean, you're not in the room, you don't necessarily know, but is this just pride at this point? I mean, we had Rob Kaplan, actually, Dallas Fed president, this week saying, I think we should start scaling back on MBS.
Well, I don't think it's pride. I think it's the Fed's view that the economy still needs help. We don't have everybody back to work. We're not fully reopened. But I think there's a confusion at the Fed, perhaps between demand and supply. It's not obvious to me that the Fed is going to be doing more to create these jobs. The reopening of the economy is going to match workers to jobs. And as you said, people are changing their preferences. So I think that that's what the Fed is missing. And perhaps they are saying that and we just don't see it, but I see it as missing.
Okay, so Sarah, let me try one more time. Is it possible the Fed actually wants wage inflation? Because one way perhaps to match up those openings with those people is just pay people more money.
Right. And you've actually heard Chairman Powell talk about the fact that getting inflation up to 2% is not just a must-have, it's actually a good to have. Like he's starting to spin it a little bit as if it is something that is desirable. So that, of course, is this idea that inflation had been running very low for a long period of time, and the Fed was actually thinking, how in the world could we ever get inflation up to 2%? Now, of course, that scenario has changed, and inflation is now running a little bit hotter than the Fed had ever had imagined at this time. So this idea that wages could actually increase and be the mechanism that would essentially get the supply and demand in the labor markets to match up would be essentially something good. That could be something good. And while clearly we don't want to have wage push inflation, right? There is room for wages to be moving up right now. And you can hear in Chairman Powell's, remarks and his answers to questions that might not be a bad thing.